on WeChat. He's trying to log on. I know that.
No worries. Yeah, Zoom should be easier
Yeah,
than
I see him just few seconds ago. Okay, guys, now we leave our next panel discussion with moderator James Z. James, word goes to your side. Introduce yourself and introduce our panelists as well.
Awesome. Hi guys, thanks for being here, joining us today. The topic for today's discussion is very interesting. We don't have a lot of time, so let's jump straight into it. So this panel is on investment trends, a snapshot in the beginning of 2020, and the lessons for the future. I'm your moderator today, James Zhang, founding partner of Black Panther Capital. We're a multifamily office and fund of funds, so invest in both traditional tech sector and cryptocurrency, including many funds out of San Francisco and Europe. So today we're joined by 4 all-star panelists. Please introduce yourselves a little bit about your firm and give everyone a brief bio. Why don't we start with Omer?
Thanks, James. Hi, I'm Omer Osden. I'm founder of Rocktree Capital. We invest into traditional and blockchain companies, primarily in Greater China and Asia, in North America and other parts of Europe as well. And so our mission is to help those companies bring the markets together. And so Western companies enter the China market, great Chinese companies enter the international market so we can add value to the projects.
Very cool.
Jason?
Jason?
Hey, hi. This is Jason Fang. I'm managing partner at Sora Ventures. Sora Ventures is an institutional fund backed in by family office, mostly in Asia. We started in 2018. I've been investing then. We've mostly expanded into other products like secondary advisory. We are about to launch our own KYC wallet, so we have our own development team now, as well as we've also been working on new funds along the way. So have expanded a bit since 2018, but our focus is still primarily in investments and blockchain.
Awesome. Alvaro, do we have you there? All right, I guess Alvaro is experiencing some technical difficulty. We can just push forward first. I'm sure he'll join us soon. So, I mean, the first issue that I want to tackle here for everyone, I'm sure is on everyone's mind is, the world is in a very different place than it was 3 months ago. I've been stuck here in LA for 3 months. I can't go back to Asia. As we all know, there's this thing called COVID-19 that took us hard a few months ago and still going on right now. So I'm very curious as to how COVID has affected and impacted your investments in your firm and your strategy from taking Chinese businesses and expanding into the US and playing a cross-border play, or being more of a crypto token focused fund that's helping these projects such as Casper Labs. Why don't we start with you this time, Jason?
Yeah, for sure. So like I said, in 2018, our focus was primarily on investment into ICOs. Obviously, that environment has changed a lot since 2018, and we have evolved a lot in terms of strategy. So a lot of 2018 and 2019 hasn't, in my opinion, been kind of like a adjustment in our industry, where there's a lot of shift in terms of talent, a lot of shift in terms of resources, but mostly there's a lot of shift in investments, right? So what we've done is in 2018, remaining of end of 2018 and 2019, we've been focusing primarily on infrastructure. So infrastructure on building a secondary team, infrastructure around building on products that we think would help on community development. Then I emphasize on community development because I think it's a core to any successful project in the crypto space. And finally, we also been kind of experiencing on what worked, what doesn't work, mostly with helping fundraising and really testing our market with advisory team. And Casper is one of our clients as well. So we're very selective on a lot of these kind of strategic players that we work with, but every player we work with, there's a reason behind it. And I think this is a good time for us to kind of like improve our infrastructure, test our infrastructure, and when the time comes, then we're going to go more aggressive.
Awesome.
Yeah.
Omer?
From my perspective, we've been living with this pandemic for almost 6 months now. I live in Beijing. We went over, my family and I took them to New York for the holidays, and we're going to stay a little bit longer as we saw the virus develop. And then we just decided we better stay in New York, not head back to Beijing. And then 3 months later, New York became the epicenter of the pandemic itself. So we've been living this for quite some time. And what we noticed is, the first few months of 2020, a lot in the media in the United States were wondering what's going on with the price of Bitcoin. Why are all coins going up? And the reason for that is because what this has forced is digital engagement for the entire population, particularly the blockchain population. And so in China, you had a lot of people entering the secondary markets, trading, and you saw the rise of Bitcoin and also altcoins. And we've seen that as proving out our model in terms of digital currency. Also, we have other investments in traditional. So, for example, we're an investor in a Chinese online education company. Frankly, in 2019, their numbers were not that great. In 2020, they reached their 2020 targets in the first 3 weeks of January. And so what's happening is we're seeing anything that involves digital engagement developing quite quickly. And also, related to what Jason mentioned, one of our portfolio companies, Casper Labs, we've helped them. There isn't as much activity in the West, but there's more activity now developing in China. So we've taken them and we're actually developing a program where they're launching on approximately a dozen exchanges across China. So there's a lot of liquidity in certain regions that are more impacted by COVID, going online, digital engagement like this event itself. And that's a good thing for our industry. And that's what we're seeing in the future as well.
Awesome. Let's talk a bit about the day-to-day as an investor in 2020. I think this is something that's underrated and not much appreciated for crypto investors on peers in other industries, where you don't really expect projects to be so, as we say, decentralized and spread across the world from Beijing to Berlin. Usually tech plays coming out of the West and adoption coming out of the East. Kind of like, what do you guys expect as investors day to day moving forward in terms of your travel schedule, meeting projects? Are you going to SF to meet these projects? Are you going to Berlin, or are you staying and investing from Beijing? Would projects, prefer funds that are geographically located to them, given the pandemic, the world we are in today, so they can feel closer and more helped? Or are they still looking for broad global investments?
Do you want me to start?
Sure, please.
Yeah, so that's an interesting question because we have one of our portfolio company, Origin Protocol. They have decided to basically lease out their office and go fully decentralized or distributed. I think what's really, really interesting is a lot of companies, not just like blockchain, we have some top tech companies in the world. These tech companies usually have, work under the same roof, but they kind of figure out a way to work efficiently during COVID. And now they have kind of adopted a practice where they let a lot of their engineers to kind of work from home and becoming more optional. I think this is becoming more trendy. We, for example, have always been quite distributed. So we're kind of used to this environment, but I think it's worthy to note that a lot of non-blockchain companies are doing that right now. And I think a lot more companies will find it very, very efficient. In terms of investment, we're definitely not traveling anytime soon. But we have seen is a lot of companies have reached out to us in email and in, like WeChat or if through intros. What I do think is interesting right now is because it's hard to kind of make those seed investment, early stage investment without actually meeting the person upfront. A lot of our investment strategy is now on secondary or in what we call 1.5 market. We don't usually disclose our investment ourselves, or we don't even mention that we're investors in those portfolio companies. But a lot of times we have a very, very quick turnover rate. And we'll, depending on how the market flow, we'll analyze that it's being undervalued. We'll buy a portion of it from secondary, and then we'll exit out when the time is appropriate.
Yeah. So related to what you mentioned, James, there was in traditional VC, there's the 2-hour rule, which is if you can't fly to your target company with a 2-hour flight, then don't bother investing in it. And I think one sector that's actually transcended that is blockchain. blockchain and crypto investors, whether it's institutional level or retail level, has been decentralized, distributed, global. And that's a great thing about our sector. And so I think no matter what, we are always looking globally for investments because, as you mentioned, adoption is in Asia, liquidity is in Asia, a lot of innovation is in the West. And then there's different policies between each country and there's regulatory arbitrage. So that is a fundamental part of our investment thesis. And what this requires now is that you have to be, there's a Chinese word called 接地气. And that means you have to be 接地气 in all these markets. And what that requires is you have to have a team on the ground in these major markets. And if you don't have a team on the ground, you have to have friends and partners that you can absolutely trust who are 接地气 in those markets. So I think that's an important thing. I don't think we're going to be going back to having face-to-face meetings just, lackadaisically anytime soon. It's only going to be the most essential meetings. And frankly, Zoom is a lot more efficient. But really to know the background of somebody and to feel them out, you're going to have to trust people on the ground in the locations you invest into.
Right. I guess an interesting observation, since I feel like we're all kind of, we agree that a lot of these conferences and meetings can be done virtually. Do you still see kind of a need for example, consensus and et cetera in the future, such as this conference? Where would we go in the future? Will you still travel for conferences, or are you thinking it's mostly going to be virtual right now?
For me,
let's start Omer.
Yeah, I prefer face-to-face all the time. You can read body language, you can get a feeling for the person. You don't get that from video. But video has its own advantages. Like we're all dispersed all over the world and we're having a meeting right now. We can see each other talk and so forth. And so you can do that. I think that there's efficiencies for both. I still prefer face-to-face.
Awesome. Let's shift a little bit to, as we enter 2020, I think we have to spend a few minutes right now to discuss one of the most historical events that happened in crypto that everyone's been waiting for, the Bitcoin halving. So essentially, I'm very curious on how you guys responded to the halving, if it was what you expected to price movement, and whether you made any changes or at all to your portfolio before and after it happened. Let's start with Jason.
Yeah, so I think the halving is very interesting. By itself, I think it's already interesting, but the fact that it's kind of like happening during this period of COVID-19 and kind of the Fed printing trillions of USD every day, I think it's very interesting to note that this will have a kind of a huge impact on products like Bitcoin. With the kind of sentiment we're seeing right now, the US market, we do expect Bitcoin to continue to go over time. I think we won't probably see any huge rallies anytime soon. Maybe in 3 to 4 months, we'll probably start seeing some big rallies. But before that, I think it's going to be very flat because the US market is still kind of closed. But one thing for sure is this time with quantitative easing and just in general, we're seeing a lot more USD in the supply and in the overall market. I think that will really, really affect the Bitcoin price.
Yeah, I agree with Jason. I think that we're still waiting for the other shoe to drop in the US equities market. That will come, notwithstanding all the quantitative easing, which is supposed to be unlimited. I think the equity markets right now in the United States and globally are sort of priced into the end of June. But let's see what happens in July, August. If we can't get the economy back on track, it's not priced in. So I think we're going to see some corrections, major ones, and that'll impact Bitcoin. But going forward on a long-term basis, the birth of Bitcoin was 2008 under the exact same conditions that we have today with respect to the economy, with respect to printing money, except this time we're a factor of 2x, 3x of the amount of quantitative easing that we had back then. So the spark to ignite cryptocurrencies and Bitcoin has now, we've got an entire environment with those exact same conditions, but magnified. So I anticipate whatever we thought was going to happen in 2021 in terms of optimism for the pricing, I think it's going to be even better than that.
Understood. So did you guys in your portfolio, for example, liquidate a bunch of such as your altcoins or other tokens such as Ethereum into Bitcoin, as it was only the Bitcoin happening and there wasn't many other things happening with the altcoin market, or are you still kind of seeing the correlation to be close to one here? I'll always start with Omar this time.
Yeah, I think that you know, a lot of people did get hurt by the crash in March. A lot of funds did. We were impacted. We had equities, obviously, and we needed to have liquidity. We also, Gangan, which is like leverage on Bitcoin. Obviously, that's to drive returns and make things efficient. Luckily, we didn't have too much leverage, but we did have some. I think anybody participating in altcoins and Bitcoin will utilize this tool. And so if anybody did, depending on how conservative they were, they probably did get impacted. And we did as well, but we've done great to control that. And now we're just ready to jump into the market again as things we believe will drop in price. So we're just waiting.
Got it. Jason?
Yeah, so for us, I think, I totally agree. I think we're very much affected by kind of what happened in March. But like, once again, what's really, really interesting, I think, is because we've spent so much time on kind of researching and developing like proper infrastructure. I think, what happened in March is a very, very clear indication whether your strategy works or not. The things we're seeing right now in China, at least in Asia, is a lot of people like to have short-term investments into Bitcoin, into secondary. We call quant developers, quant traders. The problem with that is it's incredibly risky in Bitcoin. And what we've noticed is the performance for traders who are more long-term, their performance is actually really, really good. In fact, a lot of that strategy actually worked really, really well during March. So it really depends on kind of like what we're seeing right now moving forward. But at least to us, it's very, very clear that short-term traders, quant traders don't really, really work in our environment because the exchanges infrastructure are not ready yet. We're definitely going for more of a long-term strategy.
Yeah, and I would just add to what Jason mentioned, that I think that there's significant amount of leverage in the markets and also short-term speculation. And I think that that's generally hurting the price of Bitcoin. I think that the appreciation could be a lot better if we didn't have so much leverage and short selling and people going bust. And so what that does is it tends to accentuate the swings. And frankly, there's even possibility that there's a considerable amount of manipulation out there, because when the price tanks, then a lot of people lose their Bitcoin as well. So I think that this has somewhat capped the rise of the price of Bitcoin over the long term. That has been a challenge.
Awesome. Yeah, I completely agree. I think everyone's sitting here right now, we're all institutional investors, representing LPs, family office, etc. Haven't been in this space for a few years, and yet still there are mistakes made and investments that have gone down. So nonetheless, for the retail investors that are coming in right now, I feel like it's extremely tough. On the quant fund side, I completely agree with you, Jason. For March, I think a few of the funds that we had due diligence, such as Crypto Labs, All-Star Team, 10 guys out of Moscow, school hard again to the MIT, Systematic Trading, you got Adaptive Capital, Murad, Willy Woo, both the funds blew up from one very simple overexposure leveraged Gangan to Bitcoin on BitMEX, where they could not put up more collateral when the Bitcoin and Jonas ingested in those 2 hours that dropped to 4,000. So I think with even these very professional teams, it's extremely hard to do short-term selling. So just a word of caution for any retail investors that may be listening to not do day trading on Bitcoin too much. On the other hand, I'm very curious on kind of your advice on you guys for retail investors right now. After the halving, Bitcoin is essentially a hedge against fiat regimes crumbling. We see the weakening of many currencies around the world. Are you guys seeing Bitcoin? Obviously, I hope you do, as gold 2.0, digital gold, store of value. But for many retail investors, they see it as still a speculative risk-on asset. So what would you say to them in terms of investing in the crypto space in 2020 going forward?
Well, maybe I can start. Like, my background spans internet, traditional, and blockchain itself, and I think that's something that related to investment is that people forget their lessons quite quickly, and so I think that we are headed eventually for a bull market. I think we're going to see that. Past performance indicates that, and I think that for the individual investors, Bitcoin obviously is one safe haven, but particularly in China and other sectors, they want to make more than a 2x return or even a 3x. And so I think that the best investment are still layer one and infrastructure projects, new ones that have solid tech. The round of layer ones that we saw prior to the last halving, a lot of them aren't there anymore. And so, there are some that are there, and we're just going to get a whole new crop, because for the protocols, the technology is kind of like cell phones, smartphones. Like, you go from Nokia to Apple, then, or to BlackBerry, then Apple, then Samsung and Huawei. And it's, the tech moves very, very quickly. And in 3 years, you're pretty much obsolete. And we see that with a lot of the layer one protocols. So I think Bitcoin and investing in infrastructure for the new ones is a good way for retail investors to go if they can get in early enough.
Awesome.
I tend to see Bitcoin as definitely more speculative. And the reason for that is because a lot of people used to argue that there's a correlation with Bitcoin and a lot of the equity products in the market. But nowadays, I do feel like there is less of a correlation, which means that a big part of understanding Bitcoin and kind of like whether you should even invest in Bitcoin is you have to go back to kind of like the step one, square one, and that's really learning the basics of understanding Bitcoin. And I think regardless of how people see Bitcoin, I think the truth is a lot of people don't understand Bitcoin. A lot of people don't understand the history of Bitcoin. They don't know the value of Bitcoin. They don't know how to undervalue, when's overvalue. And a lot of these things make it very, very tricky, right? This is why it's very volatile in the industry, because when you don't understand something, you go with the flow, right? You go with the lead. If the market crash, you sell. If the market pumps, you pump, right? You buy. So there's not a lot of rational investors out there in the market, making it very, very volatile. And I think the truth is, if we want the market to be more stable and more scalable, retail investors, especially those who have never touched crypto or only barely know a bit about crypto, should go back to the basics. This is actually one of the things that we're doing right now, which is we're launching wallets that give out free crypto. And then there is a USD component in there. There's a trading component in there that enable basically people with free crypto to exchange for Bitcoin and Ether. It's a small amount, but I think it's a good way for people to start trading and having a better understanding of how crypto works. We definitely don't advertise or want people to be speculating, because we think, like I said, I don't think speculation works in this industry. Even though it's a speculative product, I think the vision of Bitcoin should kind of eventually, if you want to kind of hit the large cap, then you gotta go back and kind of like the basics and kind of build that infrastructure, which is learning, educating, and giving more free tools for people to have that experience without having to put their money up front.
Awesome.
I think one interesting development we might see over the next 2 years is the actual original use case for Bitcoin, because it's decentralized and it's transparent. You heard that Venezuela tried to access its gold reserves from the UK, and they were denied. And So Bitcoin is the only asset that you can actually own yourself. So you've got situations where governments all over the world are printing money, especially the United States. You're going to have bankruptcies and major inflation in a number of countries. You might even have what happened in Cyprus in 2013, where the governments are starting to take money out of people's accounts or locking them out of their accounts, and then people transferred to Bitcoin, which really gave the first major international rise of Bitcoin price 7 years ago. You might see that again over the next 2 years. And it doesn't take that much. There isn't a lot of liquidity in Bitcoin. It's not such a massive asset class. It just requires a small amount of money, like 100 million, 200 million, and you can make major moves in the price of Bitcoin. I think we can see things like that coming over the next couple of years.
I really hope you're true. You're right here. I might be speaking subjectively, but I hope you're right.
Yeah. The thing is, a lot of what we're seeing at least right now is even if there's 100 mil, 200 mil coming in, they're not reflected in the market sometimes. It's only the big traders who are coming in making speculative move that are really trying to affect the market. A lot of these large deals, when like for example, we have people who come to us to buy like large amount of Bitcoin, it doesn't really move the needle because we're basically connected to multiple major LTC desks.
Right.
The OTC that serve as a platform to not move the price. So you don't actually want the price to move, but it's still able to kind of absorb the demand. So because there's better infrastructure today, because there's more demand today, we have a better transparency. We have more transparency to see what actually moves the needle, what doesn't actually move. We think that even if there's going to be a lot of money coming in, it needs to be specifically like retailers, either retailers or large institutions that are kind of like in the trading space, have been trading other products, and now see Bitcoin as kind of the next big thing.
Right. Now, I think for people to come in and actually use Bitcoin as a store of value and as a use case that is intended for, they have to really understand it. And the matter of fact is, in China, in the US, it's just very hard for people to, right? In China, you go to Starbucks, you go to McDonald's, you can use WeChat Pay, Alipay 10 times easier than cash, or Venmo. In the States, you got PayPal, Venmo, Stripe, etc. What growing up in, I personally grew up in Africa. So growing up there, that taught me that, you cannot really trust your central government fiat regimes. Hyperinflation is not as mythical as it sounds. A day you can be a billionaire, next day you can maybe not be poor, but definitely not worth half as much as you were before. And this was a reality. I saw many friends of mine growing up from Zimbabwe, Zambia, et cetera, experienced, much like Omer mentioned 7 years ago in LATAM. This was 4 years ago in Zimbabwe as well. Bitcoin trading at a 4x premium. So I definitely think it really has to do with the way you grew up, your environment, your surrounding, to understand a use case for something like this that isn't used for everyday pay, ease of use, but more of a store value. I guess we have a little bit over a quarter of the panel left. I really would like to take some time to discuss right now, because I realized an interesting trend. All three of us are based in Asia, Shanghai for Jason, I believe, Beijing, and for myself and Omer. And we all travel and do cross-border investments to the US and elsewhere for blockchain. So I'd love to hear a bit more about what you guys think on how should I put this? The difference and similarities, I guess, between the East and the West, and any predictions you have in the context of, obviously we know the East is trying to catch up to the West, right? In terms of tech, there's a DeFi hack of LendDef a few months ago. Then you got the West trying to catch up on adoption of exchanges and options, Deribit, et cetera. So I'm very curious to you, because there's this like kind of whole, sub wave going between East and West. I'm curious what you guys think on the forefront. Let's start with whomever, please.
Sure. So I think the simple way to put it is US is always equity and primary market and more of a long-term investments. And I think that's unique to, I think that's the reason behind that, is because a lot of the investors who are investing in these funds are long-term funds. So by design, these funds are meant to be long-term investments. Whereas in Asia, it's more in the secondary. It's more about trading. It's more about liquidity. It's more about fast turnover. So most investors who invest in crypto funds, they're expecting like a 1 year lockup, if not less than 1 year, the shorter the better. So naturally, you're kind of restricted from investing into anything that has too long a long-term lockup, because that puts you in the spot of, you guys are fund managers into what we call side pockets, and you don't want to have too many side pockets if you're a liquid fund. So there are naturally, because it's fund structure, there are going to be restrictions, but because the culture differences, to put it simple, Asia is more about fast money, short-term money. US is more about the primary equity market.
So
Awesome.
I'm gonna look at this from a very high level and just speak directly. So we've worked with Chinese government and different provinces to promote blockchain. We've also worked on the US side with Congress. I wrote an opinion piece back in March about the SEC new safe harbor. We were at the Libra hearings with Facebook, speaking with Congress and talking with them about how important cryptocurrency is for the United States. And I'm just gonna say it very frankly that in the US, which is the leader of Western countries, there is at a very high level, there's a high degree of trepidation about cryptocurrencies and what that can do for both Wall Street in terms of competition and obviously the Fed in terms of the dominance of the US dollar. And so, what's happened with crypto in the United States is it's been, particularly utility tokens, have been regulated almost to death. And so that indicates that there's a fear of this. And so this has presented a huge opportunity for a lot of other countries that embrace innovation. China, for example. China has a great attitude of embracing innovation, embracing science. And so we've seen some of the best use cases for crypto in China, even though technically there's a policy against it. Guess what? The largest exchanges in the world, a lot of them are China facing or started in China. The biggest miners, China. The biggest use case of USDT, China. So, we get a lot of the liquidity there. And so I think that this is a big opportunity for globally. I think it's true, like a lot of the, what Jason was saying in terms of, long-term and short-term. I think the good thing about Western projects and Western investors, they're more long-term thinking. In Asia, there's a little bit more short-term thinking. They need to make money in 3 months, 6 months, 12 months. And both of them are good for the blockchain community as a whole. But I think the great thing is in Asia, there's early adopters, embracing of innovation. There is a huge speculative community that likes to take risk, make money, and that perfectly dovetails all the things that crypto represents. It's very good.
Awesome. Omer, you just mentioned mining. I would actually like to take a quick cut into mining, because I don't think a lot of retail investors, especially paying attention to the blockchain and price movement, understand that I personally, my own opinion, 70-80% of price movement of Bitcoin right now has to do with miners. And whether it be manipulation, like you had mentioned previously, or different machines, hash rates using different power sources in China, so they essentially, at what price you can get your Bitcoin is what controls the price for all the retail investors, because once the miners sell off, your price goes down as well. I'm curious what view you guys have on the miners and what you're seeing out of China and the US right now, whether you think we should actually, and retail investors should be paying attention to kind of the movement there on the chain.
I remember I was a couple of years.
Please, we have a couple of minutes to left. Yeah.
Okay.
Omer, you have 1 minute and a half.
Sure. A couple of years ago, I was having lunch with Li Lin, the founder of Huobi, and he told me that what was really going to impact the price of Bitcoin is stable coins. And what we've seen with miners is they've shifted from Bitcoin to being into stable coin. They're taking leverage in USDT, they're spending in USDT. And so we talk about Bitcoin, but actually the use case of crypto itself, stable coins are another major use case. And this is the amount of USDT that's being printed on other stable coins is massive. So mining has just transferred from being pure Bitcoin and some fiat to being long on stable coins because they use them.
Awesome. Jason?
Yeah, so I think for retailers, if they want to interested in game mining, I think that's a very, very difficult industry or difficult market to get in, just because mining is one of those things that if you don't have the best miners, then your your miner can actually get depreciated, your value can depreciate really, really fast. Our technology is always improving, and the demand for the kind of the best miners is always, always on high demand. So unless you really, really know the best people in the industry who have the exclusive access to the best miners, I wouldn't even consider it as an investment from a retail perspective.
Understood. Understood. Awesome. Sergey, thank you guys for
please,
for
guys,
this
thanks a
panel.
lot to you, to both of you, to Theodore, James, to you as well. Yes, we have to go forward. We have to move forward. Our next speaker is already here. Guys, I want to say thank you a lot for your great discussion here in this panel room. James, Omar, Jason, goodbye to you. Just please, I'm going to out from the live